Hey, can you hear me?
Hello. Hey, Ziad. How are you?
Hey, Mayor, can you hear me?
I can hear you. Can you hear me?
I can hear you very well. Awesome to have you here in today's call. How are you doing today?
Good. How are you doing?
I'm doing great. I'm doing great. Awesome to have you here again. And Mayor, I would love to know more about your own background. You showed interest on rising capital. I would love to know more about your own background. What have you done so far, and what are you looking to do next?
Sure. So why don't I start with that? I moved to the US in 2009. I'm an engineer myself, computer scientist, basically. I did my master's in computer science from UPenn here in Philadelphia. And ever since 2011, I started working on sort of different parts of the Wall Street ecosystem. I started my career with a market risk analytics team at Bank of America. Basically, we were writing risk models for the entire bank across different asset classes and lines of businesses. After that, I moved to JP Morgan, and post JP Morgan, I was at Deutsche Bank. Both of these were sell side sort of desk slash technology roles, basically algorithmic trading developer roles, writing sell side algos, um, both at JP and Deutsche Bank. JP, I was with equities. Deutsche Bank, I was with fixed income. After that, I moved to BlackRock. I was part of the Aladdin business, and I was part of a client advisory group where we were advising some of the topmost clients of BlackRock who were using Aladdin's ecosystem overall to manage their portfolios on a daily basis. So my role was working with the chief investment officers of some of the biggest clients and advising them on how to hedge their portfolios effectively using BlackRock's quant models, quant capabilities, analytic toolkits, etc., etc. I did that for a couple of years, and then I was hired by a hedge fund called Exodus Point Capital, which is a 13 billion-ish multi-asset, multi-strategy fund based out of New York. I joined the hedge fund in 2019. I was there till 2023. I played multiple roles. I was reporting to the CTO and sort of dotted line reporting to the COO. A lot of what I did was in and around strategy growth, both from a technology perspective and from an overall sort of fund perspective. So that's my background. So if I have to sum it up, I'm a pretty strong operator in the quantitative investments and algorithmic trading space. Um, and in 2023, I quit my hedge fund role. I wanted to do something of my own. Um, I ended up co-founding a wealth tech startup based out of India. Helped build, all of the technology team there, helped build the platform completely in-house. And in September 2023, the startup raised about 5 million in seed capital. Um, and that was sort of let's call it an in-between role where I was trying to figure out what I wanted to do. I sort of rolled off into very much just advising the founder right now. And my core focus going forward is building Matra Ventures, which we wanted to be a data-driven quantitative hedge fund across global markets. So that's my background up until now. I'll pause here to see if you have any questions.
Awesome, awesome to share that, and awesome to sharing that with me right here. Thanks for sharing that. Okay, got it. And right now you are looking to start your own venture capital, and then from there you are looking to establish your own hedge fund, correct?
Not a venture capital fund. I'm looking to start my own hedge fund. Um,
Okay, your own hedge fund. Okay, that's what you are looking to do right now, not venture capital, correct? You are not into this sector as well.
yeah, not venture capital. I invest in companies, in private companies myself as an angel investor, but that's about it. Right now, I'm working on launching my own hedge fund.
Okay, got it. And what are you looking to do with your own hedge fund? Where are you looking to take the hedge fund to, and when are you looking to do that?
Got it. So the first, so I'll probably have to give maybe a little bit more background. So I would eventually like for this hedge fund to be a multi-strategy pod shop. I'm assuming you are aware of the concept. So funds similar to Millennium, um, um, Point 72, Exodus Point, for that matter, Brave and Howard. So these are all pod shops where the fund follows a hub and spoke sort of business model, where the hub provides the capital, the central infrastructure, does all of the investor relations, has a centralized risk management, and eventually your spokes are all individual portfolio managers, which pretty much for the most part operate like their own small companies. And I want Matra Ventures to sort of evolve in that direction. So what I have right now is a single portfolio manager, a single strategy, which has been tried and tested reasonably over the last 4 years with proprietary capital. And I would like to get my fund going with this and eventually start expanding into looking at a lot more PMs and a lot more strategies and building the central infrastructure, effectively in house. But those are all sort of longer term sort of goals on how this fund I would like for the fund to evolve. That's number one. Number two, at the core of it, what we want to bring is actively managed, well performing global market strategies to global investors, specifically a lot more of giving investors globally access to US markets focused, actively managed strategies, which does risk management really, really well. So we will not be looking at strategies that are blindly chasing alpha, uh, rather which are doing risk management well, resulting in good performance and good alpha. So those are the kind of strategies that the fund will want to continue to look to build in-house, either in-house or using sort of the different pods and start allocating capital to it. So that's in short what we want to build in the future in terms of where we are literally just starting out. As I said, we have a strategy that we are very comfortable going live with. We think we can allocate at least about 30 to 40 million against that strategy and continue to scale it up to about 200 to 300 million. So the strategy is robust in that sense. And that's our way of getting our feet wet and getting started. Um, in terms, I'll pause here again if you have any questions. If not, I can maybe talk a little bit about the structure.
I would love to. I would love to.
Got it. So in terms of the structure, what we want to do is we want to position our master funds in a domicile called Gift City, which is physically located inside India. So for all purposes, if you've not heard of Gift City or if you've not sort of worked with people in Gift City, it's really an equivalent to a Caymans, pretty much, but which has been built inside India. So it's a dollarized special economic zone, um, through which access to global markets becomes a lot more easier. The cost of setting up a fund in Gift City is also not bad, and it is reasonably good in terms of ease of business. And the biggest advantage that we get is also we can take capital in globally in a much more seamless manner. And there's a lot of capital outside the United States that want access to good sort of US market strategies, but not necessarily everybody wants to get exposed to the IRS or the SEC. So having that sort of master structure outside of the US will strategically in the future get us access to capital outside of the US as well. And that's why we chose Gift City. And the other reason why we chose Gift City as a domicile is also that there's a tremendous amount of capital in an emerging market like India. Indian capital markets have grown extensively over the last 4 or 5 years. And they have no way of getting good quality diversification opportunity outside India. So setting up our master fund in Gift City also strategically gives us the advantage that we can tap into Indian capital who is looking to get access to global markets. So that will be the structure. So the master fund will be in Gift City for investors outside of the US, they can directly participate in the master fund. It's very straightforward. For US investors, what we will set up is a feeder structure where we collate all of the US investors into the feeder fund and eventually invest into the master. So that will be the structure that we are going to go with. As of now, we have obtained the in-principle approval to run the master funds out of Gift City. We are probably about 6 to 8 weeks away in securing all the final compliance approvals that we need to before we can start becoming operational. So that's the current state of affairs.
Okay, great. Thanks for sharing that. And you are managing already a portfolio, correct?
It is, I'm not actively, just to clarify, I'm not actively managing a portfolio. It is a strategy that's been deployed on proprietary capital
Okay.
by the pod, which is the Quant PM and the Quant PM's team that's built the strategy all along. The Quant PM is just going to be an operating partner in the fund that we are launching. Does that make
Okay.
sense?
And okay, got it. And what the capital that is inside it?
It was started with $1 million in Jan 2021. And
Okay.
over this 4-year period, now the portfolio has grown to 2.8 million. So in terms of performance, it is at a CAGR of about 27 to 28%. And then the Sharpe ratio is about 1.8. Now, we can do a little bit deep dive into the strategy itself. The strategy is really, really focused on risk management. And that's really what we think is, or rather, what we want to position as the differentiator. It's a quantitative strategy, but it's not a high frequency trading strategy. So it's a quantitative strategy that does a tremendous amount of a data driven approach and to position sizing. But it's not something that does spread betting or uses leverage. So it's very unique in that sense. The strategy is focused on downside protection and capital protection at all costs. That is why at reasonably very low volatility levels compared to our benchmark, which is the S&P 500, the strategy is able to produce materially good returns. So really, the way I would look at it is it's a risk management strategy at first, which should give eventual LPs a lot more comfort in terms of capital preservation, and then the high returns are just an outcome of how well the risk is being managed.
Does it? And as you have already mentioned right here, 27-28% performance was correct.
Yeah.
And the max drawdown report that you had.
Max drawdown is about 9% in the last 4 years.
And you could recover from it, correct?
Yep, absolutely. Yep.
Okay. And can you send over the performance report, the drawdown report of the strategy, and so I can take a look on them? Is that possible?
I can, yes. Maybe after the call, I can send that across to you.
I would love to review them. And then my second question to you right here: you are looking to start your own fund, like with the next 7 to 8 weeks, everything will be set up, correct?
Yeah, about 8 weeks. Yes, it will be set up. Yep.
Exactly. Where are you looking to take the fund to? What the end goal that you are looking to scale up the fund to?
Great question. So we would like to scale it up to about 100 million in the next 18 to 24 months. That's where we want to. We don't want to run before we can start walking. So if I come back and tell you, hey, Zia, this is like the best strategy out there, let's go raise millions and hundreds of millions of dollars, probably that's not the right approach, not the way to also look at it. I'm very pragmatic in that sense. If we can get to about 30 million by the end of this year, and if we can get to about 100 million by the end of next year, I think that will be terrific. And for us, scalability will not be an issue. The strategy will scale really well, but we also want to make sure that the growth is, done the right way, instead of taking in copious amounts of capital and not being able to handle it properly. So that would be our target. So if we can start adding, let's say, a couple of $1 million every 2-3 weeks until we get to 30 to 35 million dollars, I think that will be a great start to get to by the end of this year. And eventually, once we see that everything is hunky dory, strategy is performing well, we are able to produce good results, we can potentially start scaling up a lot faster after that.
Got it. How many team members you got right now?
From the operations perspective, it's a 3-member team, right? 4-member team, let's call it. Two of them are going to be out of the domicile in India, where the fund is being set up. One is a compliance officer, another is a principal officer. Myself, I'll be the general partner for the fund. So at this point, I don't have the luxury to hire a lot of people. So I'll be doing overseeing all operations. I'll be doing fundraising, meeting with potential LPs. And I have another partner who brings in a very, very strong network, who's been in the US for 40 plus years, had successful exits, built several companies over the last 4 decades. And our initial target sort of audience and consumers would be largely coming from his network. So for that part alone, he will be doing a lot of the investor relations to start with. In terms of the strategy itself, we have, as I said, we have a team of quants. There are about 6 of them. 3 of them are core quants. 2 of them are software engineers. One's a program manager, product manager. And the head quant is based out of Princeton. And currently they operate as a prop shop right now. So this is the overall structure of the team at this point.
Got it. And what do you think that you need to have in the place in order to get up to 100 million in the management?
No, I think really the risk management is really the differentiator that we want to position ourselves with. And we have a lot of data that we can show, especially in periods of high volatility, how our strategy is able to minimize downside risk. I think that's going to be a key sort of positioning and posturing for us. 2022, when the markets were really, really bad, which is during the Russia-Ukraine war, the markets were down, negative 17, 18%. Our strategy was up about 35%. And, 23, 24, when the markets did well, our strategies did reasonably well. So the strategy has been built in place, really, as I said, going back to focus on, downside protection, capital protection. The other thing is it's an actively managed strategy. So the portfolio gets recycled, between T0 to T2 timelines. So there's, an example of that is something fresh in my mind was on Friday when the markets were down 2%. The strategy had squared off all its positions Thursday evening, and on Friday it did not take any new trades. So we've seen that with a lot of days where the markets are not doing well. Our strategy is extremely defensive in that sense. So that's really going to be the key differentiator, is how well the strategy does risk management, and it can scale to sort of bigger levels. Hopefully it should give, especially the initial up to 100 million, you're not going to get a ton of institutional LPs. It'll probably be a lot more HNIs, ultra HNIs, and smaller family offices. And they are the ones, I think, where we can bring a tremendous amount of value, where they will not be able to take their capital to a Citadel or a 0.72. We will be able to come in and build and deploy that against a strategy which is focused on risk.
Got it. And what do you think that you need to have for operators to make sure that you will rise and close the capital targets that you are looking to have?
Sorry, Ziad, I didn't catch that question. If you don't mind repeating.
Sure. I said, what do you think that you need to have for operators inside your operation in order to have access to capital, in order to close the capital from investors, in order to get the 100 million that you are looking to get?
That's a good question. Operationally, yes, we are extremely tight right now. Again, for us, because the strategy is completely quantitative, risk management is done quantitatively, systematically. For us, the scale and capital will not be as big of a challenge as with streamlining operations around IR, especially IR. I think our plan is, once we are able to hit about 30 million to 35 million in capital, we will be able to hire somebody who can focus specifically on IR and LP communication. Until then, I do understand it will be a stretch, but it has to be, a lot of my time and effort going into that. So yes, operationally, are we there to take in 100 million capital today or tomorrow? Answer is no. That's why I said we would like to get to that stage in about 18 to 24 months. And we want to start with something that we can manage right now. So ideal would be if we can start with about 10 million in the next 3 months, get to about 25 million in the next 6 months, get to about 35 million in the next 8, 9 months. I think that is the sort of scale that we will be able to continuously manage.
Got it. What the management fee of the, what's your fee, or what it would be right here?
Right now, it will be a 2 and 20 in terms of the fee structure. In terms of the 20% performance fee, it will be caveated with two more criteria. One is we are willing to go up to about 10% as a soft hurdle rate, and then a high watermark on top of that.
Okay, got it. And do you have a lockup period?
We do not want to enforce a lock-in period. Currently, we are thinking of keeping it at 12 months. And if somebody really wants to take their capital out, they can just do it at the 2% management exit load. We are okay to let them go. So initially, we don't think that we have to hold anybody captive. We are very confident on the general sort of strategy itself. So we are not going to have like a strict lock-in period.
Got it. And how much have you invested into your own funds so far? What have you invested into so far?
So operationally, it will probably be like a $500,000 of capex to set everything up end to end. And apart from that, me and my partner, as I mentioned initially, we both are putting together another $500,000 which will go in the fund itself. And then as and when the size of the fund keeps increasing, we will continue to sort of increase our exposure in the fund. We'll try to keep it at 5% of the size of the fund, at least 2%, if not. So that will be what we will target to continue to put in our own money into the fund.
Okay, got it. Why do you think now is the best time to do that? Why you haven't done that before?
Sorry, what's that?
Why do you think is now the best time to actually start your own hedge fund? Why you haven't done that before?
It's a great question. I frankly don't have a super straightforward answer to that. I've been wanting to do this, but I also wanted to find the right sort of operating partner, the right strategy to launch it with. I think that's really what it is. So the current strategy is something that I have a lot of confidence in being able to underwrite it and launch it. And, it wasn't until over the last few months where we thought we are ready to go. I think that's one of the main factors. No other specific reason. And since if you look at it a little bit on the funny side, it's opportunistic. We do expect the markets to go down a little bit more over the next 4 to 8 weeks period. We expect there's going to be a lot more volatility. So the timing could actually be pretty good for global investors wanting to get into US markets. I think it might just work out to be a good time, but honestly, that wasn't intended.
Got it. All right. Awesome to hear it. What I would love to see right here after the call, if you can send over the performance reports, there's drawdown reports, and I can take a look on them, review them. Have you have interest any capital before by the index that you currently have today, correct?
We have about at least about $2 million of interest already.
Okay.
Across 8 to 10 people who all are willing to put in about 200K each in the fund.
Okay.
So that's where we are right now.
Okay. And so you have soft commitments. Is that the case?
Yeah, we have verbal soft commitments as of now. Yeah.
So you have soft commitments of 3, 4, 5 millions. Let's say, do you have a specific number on it?
I said about 2 million, I would say.
2
couple
millions.
of million. Yeah.
Okay. And is it like offshore or is it like from the US?
A lot of it is from the US. We have a couple of interested people from India as
Okay.
well.
Okay.
Yeah.
Okay. So, and you have done that through the intro decks that you currently have.
Sorry.
You have raised, you have already got the soft commitments from the intro decks that you currently have. I mean, you have done the presentation to them, or it's like your own connection. How things went right there.
Yeah, these are all people from our sort of immediate network or people who knew from our immediate network.
Okay, got it. Okay, all right, great. If you can send over the performance report, the drawdown report,